Yeah, good morning, everyone. So yesterday we saw some reversal in the US market uh, after a long around 7 days of decline. So that was mainly driven by action from the Bank of England, where we were seeing that the bonds were falling sharply post government policy of giving further stimulus to the economy by tax cut and all. So yesterday, after looking at the sharp decline, we came up with the reversal of the policy. That is, they suspended the plan for selling of the gilt, that is government bond, and also started buying some long-dated bonds so to support the bond market. So the bond prices, which were falling like anything, was reversed yesterday, and that has supported the market. And apart from that, some short covering was also in the pipeline, so that has also supported the US market to come back. Futures are marginal positive, and Asian markets are seeing some gain anywhere between 0.5 to 1%. Whereas on the commodity side, oil saw a sharp jump after lower inventory in the US, which has resulted into increase of almost around $4 from yesterday's same time level. Apart from that, aluminum was flat, copper was up by around 1%, and iron ore 1%, and steel was flat in today's morning trade in China. Tomorrow, RBI meeting is there, and the rate increase expected is at around 0.5%, the consensus estimate. So anything below that can have a positive impact on the equity market. We had seen consistent increase in the interest rate, and now the inflation target for FI for the fourth quarter is at around 5.7%, and the interest rate is reaching to that near level. So quite possible we may see uh, the tone of the RBI may be soft post this increase in the interest rate. I'll request technical team to take it from here.
Thank you, sir. Good morning, all of you. After 2 weeks, we saw that Nifty retraced towards 200 DMA. Yesterday, first time Nifty closed below the 200 DMA. Today, after global cues, Nifty opened a gap up. Again, Nifty opened 200 DMA above that level, important level. That's come around 16,980 in upside. If Nifty weekly close managed to sustain 16,980 level, then we expect further rally towards 17,300 and upside. So next 1 to 2 trading session, we expect a little bit bounce back in Nifty index, but upside immediate resistance is 17,100, 17,300 in upside. Immediate support today's session after gap up, next immediate support Nifty place around private level place around 16,900, and below 16,900 16,780 downside. So we expect today gap up open, and we closely watch that Nifty sustain that 200 DMA, that is 16,980 level. In next half, if Nifty close above 17,100, then we expect further rally. Otherwise, Nifty after gap up, we see that range 17,100 and 17,000 in upside. Bank Nifty also trading the below the important average level, and today Bank Nifty managed to open above that level and managed to sustain that level, 38,300 and 38,400 in upside. Then we expect in some positiveness in banking stock. But if failed of close about 38,300 level and sustain that level, then we are already cautious view and banking bank Nifty also. Nifty Finance also trading below the long-term average. We see that 16,800, 900 in upside is the immediate resistance for Nifty Finance. The first immediate resistance place around 16,950 and 17,100 in upside, and support place around 690 at downside. Stock specific, Metropolis looks positive at current level 15 or 20 above. we expect is a rally towards August high, July high, that is 1650, 1640 level. Downside immediate support place around 15, 1470, 1450. We already given call in Metropolis. Second, emphasis looks positive at current level. Already retraced 40-50% in high range, and right now trading in oversold zone. So right now trading in 2080 above level, that we expect further rally 21, 2200 in upside, and support place around 2030 at downside. That's it for technical derivative guidance.
Yeah, derivative guys can take up after the fundamental team. So
Hello.
what we are seeing is
Yeah. Is it audible?
yeah, go ahead, Amit.
Yeah. Good morning, everyone. So, as per derivatives data outlook, we are witnessing that as per the OI positions on the yesterday basis, heavy call rate positions got added up between 16,800 to 17,000 strike. Now, in today's trading session, we are witnessing that SGX is likely to open around 150 odd point on the upper end, but that is like we are seeing that the OI positions from the put writer front, the put writer positions got unwinded between 17,000 to 17,200 strike, and on the upper end, call rate positions are again getting added up at 17,200 to 200, 300 level mark. So, if today in today's session also, if SGX is and Nifty is likely to getting open on a higher end, we are seeing that 17,100 and 200 will act as an important resistance zone till the time Nifty is not closing above 17,200 level. Till that point of time, we might witness a sell on rise momentum in the market. Currently, we are seeing that the India VIX yesterday closed at 22 level. So this is a negative scenario till the time India VIX is not going below 18.5 level. Till that point of time, we might act as a market to be on the negative front. While on the monthly basis, we are seeing that the put writer positions are getting lesser, while say on yesterday trading session at 17,000 strike on the monthly basis, there was almost around 10 million positions. In today's trading session, around 1 million positions got liquidated, and against that 7 million positions of call writer got added up at 17,000 strike. So this is a negative scenario, as in today's session we are seeing that index is likely to open around 150 points. So whomsoever holding the long positions get a chance to exit on the upper end around 17,100, 200 level, should exit long positions and again wait for the short positions. Once if Nifty again goes below 16,900 level, then we might see some sell-off pressure and fresh sell-off below 16,900 level towards 16,600 level. As per stock specific and sectoral specific, we expect some specific stocks for today trading session would be Asian Paint, HUL, Metropolis, and Divis Lab. This four counter looks positive in today's trading session. Thank you.
Yeah, good morning. So what we are seeing is that liquidity conditions in the banking system is drying up, and this could result in this is actually resulting in higher funding costs, especially on the wholesale side, and also on the other hand, the credit demand is high from many other sectors. So banks are also shying away from giving funding to NBFCs. So we think that lending cost for NBFCs is set to increase after a couple of years of soft rates. So this is sentimentally negative for NBFCs, as their net interest margins will come under pressure. However, this will not impact microfinance companies, as they can easily pass on any increase in cost of funds, and also the tenure of their lending is 1.5 to 2 years. So they can conveniently reprice it. Also, recently we interacted with the management of Ujjivan Small Finance Bank. We had covered the stock in our monthly pick a couple of months back, and company said that credit cost for the current year will be at around 1%, and thus for next 2-3 quarters we are of the view that the credit cost will remain subdued, and that will allow the bank to continue to post ROA upwards of 2%. However, stock is still trading at valuations which were depressed during the COVID times, and if we look at the holding company, it is still trading at 20% discount to the small finance bank. So indirectly, it is quoting at almost 1x price to book, which we feel is attractive. And given the recent correction of about 10 odd %, we think current price is good to accumulate and buy the stock. So we maintain our bullish stance on Ujjivan Financial Services. Thank you.
That is increasing its rate by an average of 9.6%. The new tariff will be effective from 1st January 2023. This is positive from Blue Dart. Thank you.
Yeah. Apart from this, yesterday we interacted with the management of GE Shipping. If we see the last quarter result was very excellent, and the company saw EBITDA moving up to almost around 700 crores from previous quarter of around 350 crores. So 100% jump was there in the first quarter as compared to fourth quarter. This trend is likely to further improve in the second quarter, considering that their tanker rate has further moved up by around 30-35% in the current quarter as compared to Q1. And also the product carrier rate is also up by a similar amount in this period. Whereas the dry bulk is declining by almost around 33% from last quarter, and LPG carrier rate was down by around 15% as compared to Q1. So in all, there are some decline in some sector, but the tanker rate, which has increased substantially, will likely to support these quarterly results. Apart from that, their offshore business has also turned around, which were consistently incurring the losses, and now it is in profit for last 1 or 2 quarter. Apart from that, one of their jackup rig in offshore is likely to repriced in coming period, and bidding for the same is likely to happen. The jackup rig will be put to use only from the next year first quarter. So in this current quarter, they will continue with the old rate, but the new rates is likely to be almost around 40-50% higher than the last rig which was deployed and was continuing in the operations. So though the rates on which they carry their chartered their ships and all are very volatile and continue to remain keep up and down in the coming period. But overall, seems like, considering the valuations and all, they got the NAV of their ship at around 732, and the share is trading at around 0.6 times their NAV. Looking at that, stock seems positive for the near term. Long-term view is difficult to take, considering that the volatility in the rates of these ships. So looking at the current quarterly earning, which is likely to be better than Q1, which itself was very good, we feel that another EBITDA can increase by another around 100 crores as compared to last quarter of around 700 crores, and fourth quarter around 350 crores. So quite possible that the stock can remain positive and can give some returns towards the nearing to the results date. So looks positive from here. Then apart from that, Ramco Cement started one of their unit, 2.5 million ton unit. They had started in Andhra Pradesh, which is likely to increase the supply, but overall seems positive as the capacity is coming at right time when the seasonally the demand is likely to improve from post-Diwali season period. Also, Torrent Pharma has received the Form 483 from US FDA, and with 3 observations which are not data related. So nothing so great, but may remain some marginal negative, but doesn't seems to be anything alarming for the Torrent Pharma. There is a news showing around in the market that Adani Total, which is holding around 20% shares in Adani Green, Total CEO has stated that they can cash out on this holding, as their purchase price was less than 1,000 rupees, and the current prices are almost around 2.4 times the current purchase price in 1 year. So this news, though there is no confirmation, but can put some pressure on the stock price of Adani Green. I'll request commodity team to take up from here.
Thank you, sir. Good morning, everyone. Yesterday, we witnessed a sharp recovery and short covering in commodities. Today, there are chances of a reversal in overall commodity as the dollar index is expected to fall. Today the strategy should be buy on dips. Gold, one can buy around 50,000 to 49,800, which is a good support area. So buying on dips is recommended. On higher end, 50,500 to 700 could be the possible targets. Silver to 56,000 to 55,800 seems a good support area. So one can initiate a buy and prices again can test 57,000 to 57,500 on higher end. So overall, crude also seems to be positive, and prices can test 6,800 to 6,850 on higher end. So buying around 6630 to 6,600 is expected. Buying should be witnessed, so one can enter long on dips. Uh, Natural gas also prices are expected to test 600 levels. So buying around 570 to 570 with a stop loss of 560 is advisable. Buying is recommended. Uh, in metal complex also, copper prices are expected to test the support area of 635, 636. So buying can be initiated at that levels with a stop loss below 630, 630 being important support area. And if closes above that, then we expect prices again to test higher levels at the resistance of 654, 655 levels. Zinc also, one should initiate a buy around 250, 265, 64 levels. Prices are expected again to test 270, 272 on higher end. So that's it from me. I'll ask Ria to give a view on currencies.
Thank you, sir. So on the currency front, we had seen uh, an erratic momentum in the second half of the sessions. This is because Bank of England has came out and tried to put a cap on the 30-year treasury yields. They had said that they'll be purchasing the 30-year yield bonds and have postponed their sale of bonds or sale of gilts to the end of October. So 14th, so 28th, that was yesterday. So from 20th September to 14th October, they'll be purchasing bonds, which means there will be also a quantitative easing that will be happening into the UK altogether. So this led to an erratic momentum into the pound, and after testing, after giving a spike, it again went on to test the lower levels at negative 0.5%. Also, the Indian rupee fell to a record low, closing at around 82 levels. This is on the back of strong greenback sentiment, and of course, the rising geopolitical tensions in Europe are also pushing the sentiment towards the greenback. FOMC has remained hawkish. We are also expecting the RBI, who has scheduled its monetary policy meet tomorrow, will remain hawkish, and 50 bips could be expected on the rate hike, taking the interest rate to 5.90. So all in all, USD INR today has opened on with a in red or on a appreciating tone at around 81.99. It marked the low of 81.74 and right now is trading at around 81.83. Now the support area in the USD INR today will be at 81.68. If it breaches that, more red momentum could be seen and one can short for the same towards the level of 81.34. 81 levels. The resistance will be placed at the 82 levels. In JPY INR is also experiencing a red momentum in today's sessions. USD JPY is on the highs at around 144.40. This is the reason why we are seeing a red momentum into the JPY INR. You can go short into the pair below the level of 56.75 for a target of 56.60, 56.50 with stop loss at the high of today. For GBP INR, it has opened on a stronger note, but a sideways consolidation momentum to weak momentum could be expected unless it gives a breakout to the resistance of 88.66 in today's sessions. If it gives a breakout to that, one can see it moving higher at around 89.25 levels. So for going long, wait for the breakout to happen. In the Euro INR, you will also see the resistance placed. It is currently trading at 79.46. You can see the resistance placed at around 79.68. Once it gives up 79.57, 79.68 is the resistance level. Once it gives a breakout to that, you can go long in the intraday sessions for the target of 79.90. Keep a stop loss at 79.25 in Euro INR. So that's all for today. Thank you for listening.
Subscribe to our YouTube channel for in-depth interviews of India Inc. and press the bell icon so that you do not miss our updates.